Welcome back, everybody, to Magnolia on Money, where we discuss everything financial from the economy to retirement. I'm Ed Cox with Magnolia Wealth, and today we are going to discuss what is a bull market, definition of a bull market, what does it mean, are we in one, all those type of things. So you've probably heard, bull market, bear market, and that really came about, if you think about it, bears hibernate and they pull back, retreat. So when markets are retreating or going down, sometimes we refer to those as a bear market. And when they're charging forward, going up, that's what bulls do, is they charge at you or move forward. So that's where the bear bull comes from. So, but today we're going to talk about what is a bull market, and you'll find out as we get into this why we're focusing on a bull market at this point in our economic, where we are economically. So let's dig in. All right. So what is a bull market? Are we in one? How long do they typically last? And then what about returns? So the first thing is, what is a bull market? Well, a bull market is when a major index, so we'll use the S&P 500, has risen by 20% or more from its most recent low. Okay, so let's look and see. Are we in a bull market now? Yes, we actually are. So the latest bull market is considered to have started last October the 13th. So October 13th of 2022, and that's a day after the S&P closed at a recent low of 3577. That was the number of the S&P. Okay, so I went and tried to attempt and do a screenshot went to Yahoo Finance, pulled the S&P, and I got pretty close. I couldn't get exactly the 20% showing up on the screen, but it was close enough. So you can see there at the, let me use my laser right here, 19.72%, but we actually hit that 20% mark from our recent low, which was here October 13th. And here we are. So we are in a bull market, and people think, well, golly, Ed, I don't know. We've definitely been through some pretty rough times in the market, and we have. But as a definition of a bull market, we are in a bull market as we speak. So what does this mean? How long do they last? Those type of things. So if we go back since 1932, bull markets have lasted on average nearly 5 years. So some last really long. So if you look at from 2009, when we came out of the real estate bubble and the mortgage crisis, we came March of 2009 was the end of the Great Recession, and it stayed a bull market for almost 11 years. So that's great. That's the longest bull market to date. But typically they run about 5 years. So these are good news. So market's up, and typically they last 5 years. So those are good. They're good things. What's the average return we see in a bull market? So average return gained in a bull market is about 177%. And of course, that's going back to 1932. And that just tells us that, look, on average, the gain of our market during that bull run period is around 177, 178%. So these are all good things. We're in a bull market today. We know that. Average bull markets last about 5 years, and our returns are typically about 177, 178%. And this is using the S&P 500 as that gauge. Now, you could use, you could go back and get different numbers if you were looking at the Dow Jones or whatever, but typically right now, most people focus on the S&P 500. So, things are good. The market's doing really well. Inflation looks like it's come a little bit down and seems to be, surprising some of Wall Street, some of the economists that, inflation is starting to calm down a little bit. We'll see how long it lasts, and hopefully we can keep the Fed from raising rates again. So next time we talk, I'll discuss what the Fed has decided to do, and continue to keep you guys updated with what's going on in the market. Y'all have a great week. God bless. We'll talk to you soon. Take care. Bye-bye.